have some amazing deductions that a lot of times are overlooked, not only by realtors, but also by entrepreneurs. And it's not just one part. I know you talked about this before. Will you explain why is a deduction for an entrepreneur or a real estate agent? Why does it matter so much, every single one of those deductions?
Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day.
Hello. This is Jennifer Hammond, and I'm so excited. This is live on YouTube. We are doing this every Saturday morning. As you know, for years and years and years, I've done live on Saturday morning on Sirius XM. So now I'm live on YouTube. And of course, I am so excited to be joined by Linda Marlor. She is a tax expert. If you don't know about her, boy, you need to know. She has really specialized in our niche. And I want to say ours because those of us who are entrepreneurs, and specifically those of us who are realtors. So Linda, welcome to the show. Yay!
Oh, thank you, Jennifer. Thank you so much. It's always a pleasure to be with you and help your listeners and viewers too.
And we got viewers too. I'm so excited. So one thing, and we are also live in Clubhouse as well. So we're doing all of these multiple streams to make sure that we can help people. My intention, I was listening to Oprah Winfrey talk recently, and I realized that's really important. I always want to put my intention out for every single show. And so one of the things my intention is for today's show is that we help realtors, that we help entrepreneurs with tax secrets that will really help them in one way or another become more successful, save money so that they can be more successful in whatever business they have. But I know you specialize with realtors. So let's start first with, I think you have some amazing deductions that a lot of times are overlooked, not only by realtors, but also by entrepreneurs. And it's not just one part. I know you talked about this before. Will you explain why is a deduction for an entrepreneur or a real estate agent? Why does it matter so much, every single one of those deductions?
Because they save even more taxes. The difference is because people who are not self-employed, they file a regular tax return. It's much easier. And they get deductions that are personal deductions. But the minute you become self-employed, in other words, you get a 1099 form from your broker if you're a realtor, or if you're just a doctor, a lawyer, whatever, you have money coming in. Now you're entitled to claim the super deductions, which are called business deductions. And business deductions save you 4 taxes, whereas a personal deduction only saves you 2 taxes. So guess what, Jennifer? If you have a choice, you're going to go for the business deductions. But many times, self-employed people, they have lots of business deductions that they don't even know are available to them. I sort of call it the big 3. And I've been stressing these for 30 years. And if you like, we can cover them today. You've heard me talk about them millions of times. But the first, of course, is office and home, if you have one. The second one, of course, is hiring your spouse or you're hiring yourself so you can deduct all of your medical bills as a business expense. And the third is opening up, which has been available for 20 years, so it's not a new law. It's opening up a 401k. So those are the big 3. But like I said before, the people who are self-employed, let's say they have a deduction for their home mortgage. That's wonderful deduction. It's probably the most important deduction anybody can have. And you and I, as both being realtors, and of course I'm an accountant also, we know how important it is. But that only saves you federal and state tax. And now, if you have office and home deduction because you work out of your home sometimes or part of the time, then you can take federal, state, Social Security, and Medicare tax deduction. So it's 2 versus 4. And without going into too much detail, that's basically the reason why people who are self-employed need to get tax help. And I don't just say that as an accountant.
Well, that's why I wanted to start with the basics. So I want to go deeper into those different things that you talked about, because again, medical expenses in, year 2020 and now 2021, so often people are like, oh my gosh, the medical expenses that we face are so much more dramatic, especially as real estate agents or entrepreneurs who don't have, the same level as if they were working for a corporation where they might have just an enormous amount. So let's go ahead and let's start. That the one thing is, so would you like, I love you asked that question. Would you like 4 ways to deduct something, or would you like just 2 ways? So that's a really basic 4 versus 2, 4 or 2. So I know it's, and one of the reasons that I wanted to start there is so, and I'm going to also step back one more level, because this is something that I also realize with taxes that so often people don't realize. A lot of times when someone just becomes a brand new real estate agent, they just got their brand new shiny license as a real estate agent. Whoa, brand new. I was thinking about, here's one. I have 3 licenses, but it's amazing because I remember when you first get your license, you're like, oh, I barely even know how to do my business. Never mind, how do I make sure I'm tracking my taxes and my tax deductions and all the other stuff? So if somebody's going from a 1099, from a regular W-2 job where they work for a corporation, or maybe they just got out of college, and so every job they've always had has been working for some other company, whether it was working at a coffee shop or working in a restaurant or whatever. So if they had a W-2, well, maybe not a restaurant, because it depends if they were a waitress or if they were a hostess or what their job was. But if they were doing a W-2 job and now they're coming to be a 1099 as a licensed real estate agent or as an entrepreneur, what are like some of the basic things that they need to know?
Oh, well, first of all, they have a whole world of deductions that have just opened up to them. And this happens so often. I have a couple of real estate ladies. They're very successful, like you, of course. They're not licensed in 3 areas like you are. My gosh. But one of them, 3 times the work, and all of that continuing education, which I hope you come to my classes. I know you do.
I do. That's how I first discovered you. I'm gonna interrupt you. I want you to answer that question, but I'm gonna interrupt you. So anyone who understands, Linda loves to teach. And one of the reasons that I fell in love with Linda is because she teaches. Oh, Linda, wait till you see this. Guess what I have?
Oh, the magic wand. Oh, yes, good girl.
You gave me this magic wand because, of course, one of the things that you teach is how do we wave this magic wand? Woo! And then go ahead and magically get rid of all sorts of taxes. So I think, number one, I wanted to make sure people know that you do continuing education for those of us who are licensed real estate agents, but you also do it for others as well, continuing education, right?
Oh, that's right. Medical societies and legal societies. It's so much fun because I love helping people. I call it transferring. They're transferring from being an employee, which is wonderful also, but to being self-employed. And when you become self-employed, you're not just an entrepreneur, you are your own company. It's as if you started your own IBM or Oracle corporation, because now anything that you spend money on that helps you make more money, that's a tax deduction. And it's so difficult when people are starting out. I call them my baby rookies. People have been licensed less than 5 years in real estate or something else. I was going to say 2 of the most successful ladies I know in real estate, not as successful as you, of course, Jennifer. One of them started out as a French teacher and the other one was a nurse. And so they just decided they couldn't take the hours or the pay, and they wanted to be on their own. They had children, they wanted to spend more time with them, things like that, or they'd just gotten a divorce and they didn't want to do it, and they wanted to change their whole life. And they had no idea, because if you're a teacher or an employee, you really don't get to deduct anything. Even nurses, they pay malpractice insurance and they have uniforms and they have membership dues. None of that is deductible as a nurse unless you're self-employed. And the same with teachers. But now you become a realtor or a doctor, a lawyer, something like that. And you have expenses, you have dues, you have to get educated. A lot of times you need your car for driving around. And of course, many times the first thing you have is a space in your home that you use regularly and exclusively, because those are the magic words. So all of these things become deductions that you never knew about before, and they're all open to you. And the best thing about a home office deduction is it's the same home. You're not spending any more money. You're just dedicating a space in your home that you're using for business. I'm sure Jennifer has a lovely space because you do so much work. I can't even imagine. I'm
And I
sure
have
you're.
so many different businesses that I love as an entrepreneur, I just can't help it. But I think it is one of those things that, again, you mentioned this before, but you said it so briefly. It's so often overlooked. So will you talk about, give an example of how much money could be saved by someone deducting their home in office expenses?
Absolutely. We figure out that usually the average realtor or anybody who has a space in their home, it's not a large space. Sometimes it's only part of a room. It doesn't have to be a dedicated room. My home office, I actually built a little addition on the house, and it's only part of a very large room that I built. But it's whatever that square footage is. And it comes out to be an average sometimes between 5 and 8% of somebody's home. So let's say somebody has a 3,000 square foot home. Well, 5% of that is how much? Come on, 150 square feet. Or maybe they live in a 1,000 square foot apartment. So they've dedicated maybe just a corner of their bedroom, perhaps. But whatever that percentage is, you measure the square feet of your apartment, your condo, your home, and then you measure the square footage that you actually use. And the two magic words are regularly and exclusively. That's your business area. Now you take that percentage and multiply it times all the expenses for running your home. And this includes your condo fees, your insurance, the mortgage interest that you pay, all of it. There's no limitation, because there is a limitation on how much mortgage interest you can claim on your personal tax return. But as a business expense, there's no limitation. The same with the real estate. Yes, yay, yeah, that's a good yay. And also the real estate taxes on your home. And did I say HOA dues and things like that? So
All that.
now this is money you were spending anyway. And now it's a fully deductible business expense, which saves you, remember, it saves you 4 different kinds of taxes, which is wonderful. And the taxes are very high for everybody. If you earn about, let's say you earn about $70,000 taxable if you're single, or maybe over 100 and something if you're a married couple. Well, that puts you in at least the 22 to 24% federal bracket. That's one tax. Now, you always have a state bracket, and those usually run between 6 and 8%. But Jennifer, there are 7 states that don't even have a state income tax. Like
Yay!
Texas,
Texas,
Nevada,
Florida,
Florida, Nevada, the state of
Delaware.
Washington, these places. But the states that do have them, it's around, let's say, at least 6%. And then on top of that, you have to add your Social Security tax because you are self-employed, and your Medicare tax because you are self-employed. So if you add all those together, by the way, the Medicare and Social Security tax alone is 15%. So even if you have no taxable income, but you did earn at least $400 net from being a self-employed, maybe you're just starting out in the first year, that's all you earned was $400 after all expenses. On that $400, you're going to owe $60 Social Security tax. But if you earned $10,000, now you're going to owe $1,500 Social Security tax. But let's say you're in the 22% bracket, okay, plus Social Security tax, that brings you up to 37, okay? Wait a minute, I'm sorry, 14 and 22, 32, 36%. And then you have 6% for state tax, so that's 42%. So now, here you have somebody, they've only netted $20,000, but if they're at least in the 22% bracket, which doesn't take much, they're gonna lose 46% of what they made. This is why every deduction is important. So let's say Jennifer decides, oh, this year I'm going to treat myself. I need some new equipment to do all of my videos and things. So I'm going to buy a new beautiful $2,000 laptop or something like that. But Jennifer doesn't pay $2,000 for that, because the minute Jennifer signs her tax return, she gets back about half of it. So that $2,000 computer, which is going to help her make more money and do an even better job on all of her wonderful shows, it only cost her half, $1,000. So yes, go out and spend that money on things that are deductible because the government is going to reimburse you when you sign your tax return.
I think it's so important as just a basic thing for every real estate agent to know that. And that's why it's so important to find a method for tracking those expenses. And I know one of the gifts that you give, and I think, and we didn't talk about this before we went on air, but I know that a lot of times you give a gift for people to help them with the most overlooked deductions. So if they were the three most overlooked deductions, and I want to talk about those again in a kind of a little bit deeper thing, but if people wanted to know more, how do they find out more about you and your company? I know you're in Rockville, Maryland, but go ahead and tell them your website.
Sure. It's called Tax Masters Inc. And we have nothing to do with that stupid firm in Texas, I think, that went bankrupt. I'm the original one. I started my company almost 40 years ago. It's tax-masters.com. We're in Rockville, Maryland, and we specialize in self-employed people. All kinds. We have all kinds of people, though. Washington Redskins. Oops, I'm sorry. The Washington football team.
The football team, yes. We've changed
Yes.
our name now for the football team. But yeah, you have sports celebrities, which is fun. You have all sorts, because there's so many entrepreneurs. And you also, one of the other things, and we don't want to go down a little side trail yet, but you also do international taxes, right?
Yes, I speak 4 languages pretty good. A couple of them anyway. And we speak 10 languages, all the different, there's 20 people in our office. So we handle clients that we have many Americans who are all over the world. I get to go and visit them and deduct my trip sometimes. But in any case, we have many Americans working in foreign countries. And that's kind of a niche also, because they get exclusions on it. Oh, they get maybe $100,000-$200,000 depending on whether they're married or single. So yes, we take care of foreign people, and also we have foreigners. Washington is a very international area thanks to the embassy. So we have international people, and they buy real estate in Washington. And of course, real estate is one of our specialties. So we love helping them also. And I love answering questions. So I'm hoping we'll maybe get some questions today, if you like.
Yeah,
but your questions are wonderful.
I was going to say, one of the questions that I've gotten a few times is about those overlooked deductions. So we talked about the home and office expense, which again has four different deductions. And you think about that when you're looking for strategies to lower your expenses, it is so imperative that you're tracking those expenses and that you know them so that you can communicate them. Well, first of all, I should say you need to hire a professional. I'm always talking about you need to build your team. We used to call it your A team, but it's really the team of people that help you say yay every day. And you need someone like Linda to be able to talk about what are the deductions that you can take.
The other one that I was going to mention is taking your deductions for medical bills, because what happens with a normal civilian person, as I call them, who's on a job and who just gets a W-2 form, it's very rare for them to be able to deduct any medical expenses because it has to exceed 7.5% of their income. Now that sounds complicated. We'll bring it down and make it easy. Let's say we have a husband, he makes $50,000 net, whether he's an employee or not, and the wife makes $50,000 net. So on the front page of their tax return, their adjusted gross income, this is before any personal deductions, their income is $100,000. Okay, so what's 7.5% of $100,000? I'll give you the answer. It's $7,500. Now, if those people spent $8,000 last year on health insurance and medical bills, dental, glasses, prescriptions, they're only allowed to deduct the amount that exceeds the $7,500. So they only get a $500 deduction. But if you are self-employed, whether you're married or single, there is a way, and it's been around since 1955, so this is not a new law, that you can deduct all of your medical bills as a business expense. Now, what has happened? We've just gone from having non-deductible personal medical bills, they're down here in the trash can, to having fully deductible golden business deductions, which save you for taxes. I call it alchemy because we just turned lead into gold. And you would be amazed at how many self-employed people have never heard about this. Now, if you're a single person, in order to do this, we will form a C corporation for you. We'll have a lawyer do it, of course. And this C corporation, well, now we have the Jennifer Corporation, the beautiful Jennifer Realtor Corporation. And Jennifer's now the president of her corporation. So we say, Jennifer, you're entitled to a lot of good advantages. You're the president. We're going to put down that you get to deduct your car. She likes that, right? And you get to deduct your office and home, and we'll reimburse you. Oh, and by the way, you get to deduct all of your medical bills, all your insurance, your glasses, your dental, your unreimbursed medical. When you get older, like me, you'll want to have long-term care insurance. All those things now just became a business deduction. Whereas the day before you became your little C corporation, they weren't deductible at all unless they exceeded a whole bunch. Now, if you're a married couple, it's even easier because we just have the the married person who's self-employed hires their spouse, and that's a little more complicated, but it's easy to do. And we set this up for about $800 the first year, and that includes all of the paperwork, everything's included. So that deduction, I would say, is the most overlooked tax deduction in the whole United States of America tax code, because it's the one deduction that self-employed people have never heard of. And I'll tell you what, their accountants most of the time have never heard of it also, even though it became law. Actually, it was in 1954. And I've been setting up these plans for over 30 years. As a matter of fact, in my company, we've set up more of those plans than anybody I know of in the whole world. So we're the experts on it. But it's really important because, we pay a lot of money now for health insurance, and healthcare is very, very expensive also. So that's my number 2 favorite overlooked tax deduction out of the 3.
Linda, if you'll stay on for a second after we say goodbye on, this is our YouTube, but I want to go ahead and ask you to do, and you know what I'm going to say here. I would like for you to lift your voice and say yay with me. Are you ready?
Yes.
3, 2, 1. Yay!
Yay!
For the rest of the conversation, tune in for part 2 of this interview.
Hi, I'm Jack Canfield. You may know me as the co-author of the Chicken Soup for the Soul series. And if you want more help in getting from where you are to where you want to be, I want to encourage you to listen to the Jennifer Hammond Show